Welcome to Beyond Bitcoin, a podcast about all things digital assets, the global communities they are creating, the generations that are using and investing in them, and the challenges faced by the nations that are seeking to regulate them. The content of this program is not to be taken as investment advice. The opinions expressed in the program by the host and the guests are their personal opinions only. Remember, feel free to subscribe and share with like-minded friends. My name is Deryck Graham. I'm the CEO of Portal Asset Management, and my co-host is Nitin Gaur, Managing Director of State Street Digital Assets.
Good morning, good evening, good afternoon, wherever you are in the world, and welcome along to another episode of Beyond Bitcoin. My name is Deryck Graham, and I'm here with my great friend and accompanying podcaster and knowledgeable person in this industry, Nitin Gaur. Hey, Nitin.
Hey, Deryck, you're too kind, and looks like you're recovering from the normal flu that happens. So hopefully you're almost at the tail end of your journey towards recovery.
Well, I'm on my way. This is typical of the sort of the love bugs that you get on an aeroplane when you fly around the world. You know what I mean? And it's one of the very few times that I haven't worn a mask on an aircraft. I'm not concerned about COVID. I'm just sick of getting sick on airplanes. But at any rate, so we'll get through that. What an amazing month it's been, Nitin. An amazing month. You know, the market has gone sideways for a number of months up until now. People are literally be getting bored. And in 1 month, we've seen the market cap rise from 1.05 trillion to 1.28 trillion, 21% up in a month.
Amazing.
We've seen market volumes rise from 16.8 billion turnover in a day to 96.3 billion turnover in a day. That's 473% increase. We've seen Bitcoin go from 26,221 to 33,862. That is a 29% increase. And of course, we've seen Solana go from $19.37 to $30.22. That's a 55% increase in a month. And there's more. But this has happened because we've seen BlackRock turn around and put their spot ETF up on the IBTC, which is the Depository Trust and Clearing Corporation website. Their IBTC is their code, and they've put it up on the Depository Trust and Clearing website. And all of a sudden, everyone goes, right, game on. There's going to be a BTC ETF at last. And so the reaction to that was that we saw the CME, which I call the safe zone for institutional investors, the Chicago's Metals Exchange. You know, it hit their biggest opening interest of 100,000 Bitcoins or $3.4 billion for the first time ever. And we saw things like little fledgling exchanges in Hong Kong, like the Hong Kong CSOP Bitcoin futures, you know, previously doing turnovers of 125,000 to 250,000 a day, hitting 22.37 million in a day, or an increase of 17,700%. So all of a sudden, you've seen the market surge ahead, and just on a little bit of hope that we're going to see the ETFs put in place, and of course the obvious ripple-along effect that that's going to have in this market space. But it's October, isn't it, Nitin?
It is, Deryck. And to your point, the show is Beyond Bitcoin, but today it's all about Bitcoin. That it's October. So October is also called October in the crypto land because it's the Bitcoin white paper that is published on October 31st, I believe, in 2008. This is just after financial crisis. And it has kept up its name and reputation ever since, that every October you see a rapid rise in Bitcoin's valuation and the entire enthusiasm. And maybe that's what's happening here, that we have to keep up that tradition. But I think some of the metrics that you rattled, Deryck, are quite true. And I spent some time in trying to evaluate what actually happened, because a few people I follow on Twitter, and I was following crypto Twitter to understand what's driving these things. Because in many cases, there's a thesis that there's a halving happening in April of next year. And generally, there's a whole thesis around the valuation around halving, and it's oftentimes priced in, or oftentimes it takes a year before the actual valuation catches up with the true valuation post halving, because it takes time for the industry to keep up with the adjusted sort of energy requirements for the newer incentive economic, which is halved after the mining incentive per se. So I was looking at all these metrics and I was asking what's going on here. But then if you recall, last week we had an intern snafu at Cointelegraph, which again pushed this ETF expectation, spot ETF, I would say, because you still have futures ETF in place. Spot ETF, 30 plus different are still pending, and there was a report that came out. But last week there was a little snafu that actually had a short-term, like 11 minutes of raise and $100+ million liquidated, especially in the derivatives and options market, in terms of the folks who were on short and margin calls were liquidated. It is super interesting, right? Just in 11 minutes, we had $100+ million worth of liquidation happen. And as you mentioned, the TTCC, the Depository Trust and Clearing Corporation, which generally has a database of all the sort of ticker symbols and all the assets that are on public markets, IBTC, which is the BlackRock's iShares, it was briefly put in there. So people assume that when something goes on that website, there is an expectation of a hint of approval and that they're moving ahead with listing it, and ergo ability for broker-dealer networks to be able to buy the asset at some point. This is the Schwabs and Fidelities of the world. And for a brief period of time, that really pushed the Bitcoin valuation all the way to from 31 something to 35 at its peak. And we were still wondering what's going on. And we saw some of this stuff. And I was following this to say, hey, it can be just irrational exuberance, if I can use that term in this case. So I began to hypothesize, is it just the pricing in of expectation of each spot ETFs? And then there was a report both from JP Morgan and Morgan Stanley, which talked about the potential approval, the nearing of approval of all ETFs at the same time. So there's all these euphoric sort of movement building. There was a paper from JP Morgan analyst, and there was this BlackRock ETF or DTCC. These are all official terms. And I understand the Cointelegraph really screwed up last week, but these are DTCCs is essentially a depository trust. And it's also clearinghouse, for many of these broker-dealer networks. Then you have JP Morgan, you have Morgan Stanley, you have these big names. And that was one of the reasons that I began to look into that fear and greed index. And it was 66, which is greed. It's above 60, indicating, market sentiments has moved into greed. Anything less than 40 is fear. Anything 50 is like normal market, neutral. And he had reached a 16-month high yesterday, and all this crazy thing happened. So super interesting sequence of events. Did a few more analysis, but I'll pause here, Deryck, to get your perspective in Australia, because I believe you did have your meetings and in your breakfast club that you normally host. And what is the sentiments on your side? Is, of course, it's a global market and whatever pricing is here is there, but have there been any additional data points? And I do have some of the data points with some analysts who talked about that, and I questioned some of those things as I analyze these things. But I'd love to pause here and get your perspectives, Deryck.
So every month we have a blockchain breakfast. It happens on the third Thursday of the month, and we have, we had 25 people there last time. And what we really got is it's extraordinary. We had people from all over Australia that come to visit Perth, and when they do, they like to drop into the blockchain breakfast, which has been going now for about 2 years. And what I really got from it was not so much market metrics, although we did have the marketing director and the compliance officer for Binance Australia attend, which was most interesting to get some of their insights of what's happening there. But I looked around the table, and there are people there that are developing real estate tokenization platforms. They're developing bond platforms. They're developing NFTs around images. In other words, what we've said all along, which is simply everyone's been building in a bear market. And what I think is happening when we look at the market more broadly is we've seen this market oppressed for three simple reasons. One is that the macroeconomic conditions have seen interest rate rise and risk off assets being impacted accordingly. 1. 2, the central finance frauds of 2022. And 3, the SEC's choke point 2.0. Those are 3 things that have been oppressing this marketplace. And I think that we're really looking at, if I can use this analogy, there's only a certain time that you can hold a large beach ball underwater. And once you've given up holding it underwater, it's going to burst through the surface. And I really do believe that crypto's been suppressed and held underwater by 3 kind of artificial or unusual external events that have been keeping it oppressed. So these glimmers of hope that it's going to go on to more mainstream exchanges where even the simplest investor does the calculation. Wait a sec. In the case of Bitcoin, it has a finite number of coins, and all of a sudden you're going to dramatically increase access to demand. What should happen to price? Well, 101 economics. And so I think you've seen this glimmer of hope come. People have turned around and said, that's it, I'm going to start deploying. Because it's not just Bitcoin that's gone up in the last month. As I said, Solana's gone from $19 something or other to $30. And the whole market's gone up some 21%, 22%.
Yeah.
And so we've really seen this sudden, I think, release of tension. Now, this market's volatile. It's likely to drop down again with some bad news and pick up. My gut feeling is that this is the time the beach ball's starting to come to the surface.
But there are a few things on this, right? One is, it was an interesting piece by Johnny Lowe on CoinDesk, which looked into the case for Bitcoin, and he talked about 3 factors. Some of them that you discussed early on is intensification of crackdowns by SEC, which we've discussed on the show before, that anytime you have a regulatory action or an opinion that leads to a lot of exchanges sort of shutting down the trading of these, which takes away liquidity, and suddenly these assets become less liquid because they don't have a place for them to be able to exchange. And the only avenues they have is decentralized exchanges, which have exponentially grown over time. Second thing I think is three points that you mentioned. The case for Bitcoin is implementation of restrictive monetary policies that had led to a capital outflow from riskier cryptocurrency markets to a safer financial instruments. I can get 5-6% with Treasury with really no risk. So I'm really going with risk-free interest, which in zero interest rate policy framing was interest-free risk, that I'm just taking all the risks that go with it. And there's a little bit of that elements. What I did not agree with was he talked about presence of growing geopolitical uncertainties. We have 2 wars on our hands. And he talked about creating a risk aversion and prompting investors to reduce their exposure to the immature asset like cryptocurrencies. And I didn't agree with that point because, one, I think we've been here now at this for 14 years. Second thing is, I think historically, whether you look at the Hong Kong riots or anything that happened in the past that had any indication of the geopolitical crisis, Bitcoin always was on the upside, because Bitcoin was seen as, quote unquote, as in my friend Larry Fink's terms, flight to safety, or as Alliance Bernstein, which is an asset manager, talked about safe haven asset. So I think some of the analyst community begin to take this one way or the other. They could have the same reason for Bitcoin going up and the same reason for Bitcoin going down. But I do contest that in this case, Deryck, a lot of conversation on the Bitcoin valuation pricing of this. So there's a price movement, has a lot of fundamentals to it, which I don't think is the case of the like of Solana, that in spite of all that's happening with SBF and the legal drama that ensues, it's not fundamentals. It's basically Bitcoin as a structurally important asset in the asset class, the crypto asset class, along with Ethereum, sort of lifts all the other altcoins which are tied to the industry per se. And I think that's what's happening with the alts, as opposed to, I would say, there are a lot of fundamental things at play here, because the thinking here is that if all the ETF were to be approved, that actually has a upward pressure on the Bitcoin pricing, because the demand of the asset class goes up, because suddenly now you have Bitcoin being embraced wholeheartedly and with the right instruments and right vehicles. from the institutional investors, and all that money comes pouring in. In fact, I think Matrixport, which is a financial services platform or digital asset financial services platform, predicted that if all the ETFs are approved, assuming that that creates a certain level of demand, Bitcoin reaches, just on that news alone, a 56,000 as a price point. So I think there are a lot of fundamentals with Bitcoin: the halving, the geopolitical issues, the demand, the pent-up demand based on the ETFs in flow, and so all these things are fundamental characteristics that define a pricing point, which is not the case, I would think, with other alts, and they're just moving up because the benchmark asset is moving up, and thus lifting the entire industry with it, I think.
Yeah, and look, Bitcoin is always the on-ramp to this space. It's always the heralder to the space. And our show is famously called Beyond Bitcoin, and we have a lovely time talking about Bitcoin. But I do want to speak just for a moment about what I hear often, and we all hear often, from the sort of the doyens of this space. And one of them you just mentioned is Larry Fink. And Larry made this wonderful statement where he said the next generation of markets, the next generation for securities, will be tokenization of securities. And at a recent conference, at the Hedge Weekly conference in Singapore, I made this statement, which I stand by, and that is that this tiny asset class of now $1.28 trillion over the next 10 years, and not at year 9, progressively, consistently, should do the single largest reverse takeover in mankind's history. And that reverse takeover is the reverse takeover of all assets. Because why wouldn't
in 10 years?
Over the next 10 years, not 100% of the assets, but progressively to this enormous reverse takeover. And that's going to be the reverse takeover of real estate, the reverse takeover of equities, the reverse takeover of financial instruments. And what I mean by reverse takeover, which is a term we always use in the world of public companies, is that the value will be reflected in digital assets. So buildings in the center of the city will be tokenized and reflected in digital assets.
I see what you're saying.
They'll still be in real estate, but they'll be tokenized and they'll be in the realm of digital assets. And so what happens when all of these assets get tokenized and are in the realm of digital assets is you start utilizing all the digital asset support to it, decentralized finance and trading systems and international payments and gateways. That all gets used in a digital asset environment. That's why I think this is going to be an enormous reverse takeover in this space, and this teeny little asset class is going to become enormous in capitalized size. What do you think, Nitin?
No. So two things on this, right? One is I've been working on this entire thinking of what happens when we tokenize the world. We looked into what we call as bankable and non-bankable assets, and I've been questioned many times with many central bankers to say, we have a good payment system, why do we need other cryptocurrencies? And I had to always opine on the fact that it's all good for where we are today. So if you look at bankable assets, these are assets that banks can value: your house, your car, your equities, your stocks, your real estate. But we have a ton of non-bankable assets. These are things that are traded peer-to-peer: your heirloom, your patents, and your art, and the stuff that you have, the amazing painting, Deryck, that we've always talked about, which is in the living room of yours. If you tokenize all these things, they are non-bankable because it's very hard for traditional financial institutions with traditional valuation models to value these assets. But there is a market for it. There's a peer-to-peer market for it, that I come to your house, I like it, and we end up transacting. And so my assertion was that if we get into tokenization of all the assets around us, which in terms of bankable asset is $470+ trillion, as I've used the term for a year, maybe it's $1 trillion here and there, is of all the sum total of all the assets, the homes, the real estate, the stocks and equities. But if we were to include the things that we value, but the banks don't have a vehicle to value these assets, it's about $2.4 quadrillion. And for us to get into the world where we can actually do a peer-to-peer exchange of these tokenized value, you need a system that can handle the velocity and veracity of these transactions that I don't know the existing payment systems and existing value exchange systems are capable of that. So when you mentioned this earlier on the reverse takeover, I thought it's just Bitcoin. And something I have to say about that, Deryck, is that while these things give us, every time we have a market up or market down, it gives us additional insights into sentiments, into utility, into the use of Bitcoin, and what affects its pricing. And over time, we have enough data that we have certain level of maturity, as we have seen in the bear market, that Bitcoin has been a lot more mature than traditional securities. But as the value goes up exponentially in some cases, depending on some market condition, whether it's a war or whether it's a condition that leads to some devaluation of some currencies, for instance, at that point, there's also a wild card, Deryck, that we should leave it out there for now and maybe come back to discuss at a later point, is technology. That all this is driven by technology, and any technical innovation, whether good or bad, can impact the price either favorably or adversely to any of these assets. And these technologies could include things like ability for me to break cryptography, whether it's quantum technology or AI, and ability for me to strengthen, for example, Bitcoin, which will further add to the price, whether I'm using technologies like zero knowledge proofs, which not only provide anonymity, but also provide an additional layer of security of transacting between two parties, which makes the task harder for the attempted breaking of this network. So I begin to look into those areas that you have a technical imperative that we should not ignore. It's not just about sentiment and speculation. But you bring up a great point, Deryck, that as we see experiments done with bonds, real estate, and other asset classes, and we see experiments with fungible assets like stable coins and native crypto assets, there'll be a time when it's ubiquitous. And if we all get comfortable to it, then you'll see an exponential rise exactly in the .com era, when every company had to have a website.
Yes.
I see that world emerging at some point, I think.
Totally agree. And I add to it that human nature, we tend to look at the past and the present and extrapolate it out linearly. And that's not how technology works.
True.
It just doesn't work that way. I was having a conversation last night with somebody that was complaining about electric cars. And they were saying that, I don't like electric cars and I don't think they're going to take over the future. And I went, possibly not. And I said, why? And they said, the battery technology is not going to be able to make that sustainable on an environmental basis. Probably so. But he is assuming that the battery technology will stay as it is.
Exactly.
Right through. And the answer is it won't. And neither will the technology that we see get created around us. Technology always, particularly in the last 50 years, goes in this wonderful exponential growth where it takes off slowly and then just goes ballistic. Whether it happens to be smartphones, tablets, whatever the tech, internet, same thing's going to happen with crypto. It's going to become absolutely ballistic as new technology builds upon new technology. AI works with it. Internet of Things devices work with it. All of these things conflate into this extraordinary environment. This is not something you can predict out in a linear fashion. And we must realize that once this three-pronged position is keeping crypto suppressed and it takes off again, you and I are going to be going back to conversations about artificial intelligence driving Internet of Things devices, getting paid on blockchains using cryptocurrency.
Sure. Very true. But I've noticed one thing, Deryck. I think these days somehow you find a way to bring in cars into every conversation we're having. I see that as a trend.
Stop it.
So well played. Well played, Deryck. I'll catch you next time when you bring the cars in. But I think you make all the valid points. That'll be a conversation to be had, and I believe we have a series of guests we're bringing in the next few weeks to sort of dissect not just the trends, but the market, but also the projects they're working on to shed light on our thinking, which I think I'm looking forward to those chats as well, Deryck.
Yeah, no, me too, indeed. And it's so refreshing not to be focusing on whatever the sort of drama and regulations are of the day, because there'll be, for a long time, there'll be a to and from, a balance and rebalance of that. And as we know, just recently, the Australian government has released a proposal paper for the regulation around exchanges. Very positive move. Well done. You know, Australia often, a little bit like Canada, have been sort of forward lookers in spaces. You know, I think we realize we're a small economy. We've got to make a difference. And I'm hoping that this is going to be the beginning of that difference here. So
it is refreshing. No SBF conversation, no regulatory conversation. This time we went back to the basics, to Bitcoin, and certainly an exciting week, Deryck. And I hope we keep the momentum for some time and we look into various innovation that comes from this price movement, which is upward, and capital movement and attracting more talent and more projects. So looking forward to that. Hopefully we remain here for some time, but great to be here after a long time.
Very much so. All right. On that note, look forward to seeing you next week. And,
Sounds good, Deryck.
and let's see what happens over that 1 week period of time. I might have my voice back by then. And may everybody keep their eye on what's happening in this marketplace, because I
hope you feel better, Deryck. But your voice is like James Earl Jones. It's quite good. I think you should keep it. You feel better, but keep the voice.
I think I'll give both away. Thanks very much. Have a good week, my friend. Bye for now.
Take care. Bye-bye.
We hope you enjoyed our weekly conversation. If you have any questions, comments, or suggested topics, please contact Nitin Gaur or myself on the emails displayed here or via our LinkedIn profiles. Feel free to subscribe and share with like-minded friends. Stay well, inquisitive, and engaged. See you next week.